What's going on, YouTube? Time for another recap. It's back. It's time. And man, did we have some fantastic calls. Again, another day of predicting the market. Let's get into it. So we start here on the X. I do throw out some free trades for you guys here once in a while on X, mainly daily, at least one or two. And I give you guys an opportunity. For all those that do not trade in my private Discord group and get these narrated calls all day, every morning, we still like to give back just a little bit, right? So let's take a quick peek at some of the outlooks that we were doing. So multiple hours ago, we're going on 3 hours plus, okay? I was calling for the pullback to anchor VWAPs before we could go any higher. It's not that we can't go higher. We have been talking about FOMO melts up all-time high over $500 on Qs, which is a big psychological standpoint today. That's why there was no chance of it being a double top today. It always had to break out into all-time highs. We'll go over that in a second on the charts. Let's get into that first play here. So coming in today with the exact same trade plans last 4 days in a row, heavy manipulation up all pre-market. We called in premium chats, perfect scam up move by the market. Wait till we get close to open, wash out and fill these VWAPs. Watch the YouTube if you know what you're doing. So check us out on YouTube, subscribe, hit the like, and get some of these free plays over on X. So we do have these top-down anchor VWAPs that I called. So like I just said here in the paragraph, it needs to back test these anchor VWAPs before anything else is done. Algorithms speak to each other. They have magnets. They have certain things that are higher percentile in probability to happen during that language with indicators before another move can happen. Now, of course, there's nothing guaranteed in the stock market, but man, can we get an edge on risk if we know how to communicate with these algorithms, okay? So way in pre-market, I knew we were going to get a back test of these anchors. This is literally the third time we've done this week. It's the same exact play. I gave you guys a couple of freebies right here as well for the breakdown of yesterday's highs down to the green zone for a short as well. There's about 7 points there on SPY. And then we had another really big one on Qs where I said we're finishing up, again, the dump to the anchor VWAPs. And I gave you guys a little zone on this one. I said short target as posted before. It's going to be down at 498.56. That's your bounce point. So my short target from these anchors becomes a long entry, okay? So that short target becomes a long entry. Pay attention to that. Whenever I have a short target on the end, that's it. And again, we'll go over it in the chart. We'll go over it in the chart. Let's get to the chart. So on the Qs, let's start here. $500 all-time high prior yesterday to the penny, then failed back down. We treat these big psychological numbers just like gaps. The first tag is not usually going to go through. So if we hit like 400 on QQQ, 450, a big psychological whole or $half, these do not necessarily just break through to the upside, screaming up to a further breakout. They slow down a little bit after the first tag. So yesterday's first tag of 500 to the penny, we knew it was going to come back down. So we called a lot of these shorts all the way back down to a lot of good metrics, 497 yesterday. And then I said we were going to get a FOMO all-time high push, but we need to hit those anchor VWAPs first before we go higher. Okay. So if we take a look at the open, the psychological difference to this is not a standard double top. Okay. This is a huge breakout all-time high trend. If we're looking at the Qs here, look at these daily candles, right? We're just stair stepping, but they end up back testing something every single time before they end up going up. I'm giving you guys a free couple of 5-minute ones here to show you the power of these anchors. I'm not going to show you the tried and true reason for these bounces on a different time scale. I'll give you a little hint there, but if you guys want to trade with us pre-market and live as we narrate these trades, I urge you, check the description, come trade with us because I'll show you exactly these bounce points every day. Look at my track record on X. It speaks for itself, okay? So back into the anchor VWAP test. Now these dailies, again, the psychology of a $500 breakout is not standard, okay? A standard play would be something at a high-low range, right? And you have a bunch of price action in between, and you'd run up to a double top. Let's say the price action ran up in like this, and like this. This is just a standard double top, right? Price action comes into a certain metric twice, right? And then has the potential to pull back. This generally happens in a regular double top. Let's say you have data like this on the chart, right? And we use this as a double top. This is a standard double top because we have price action over here saying there's other tops, right? So we have other tops, we have other lows to worry about. We are in the middle of price action, right? We're not at the high, we're not at the low, we're in the middle. That is a standard double top, right? This is not that. Psychology driven, we are at all-time highs, FOMO squeezing moving. So what do we have here? We have dreamers, right? Trying to pick tops, getting absolutely decimated by the market. And a whole half psychology number, first hit was yesterday at that 500, and we were going to melt up through, and that's what we call it. They said there's no way we're staying under here. We're going to melt up. It'll be a small pullback, if anything, and a rip to anchor view apps. And then, of course, later on, like I said, after CPI, leading into the next couple weeks, end of July, maybe we get the start of our pullback. Okay, don't get that confused. I'm not talking about it the next day or anything like that. We have an opportunity to see massive amounts of pullbacks here, but no time soon prior to CPI and Powell. It's just not in the books. We're in an absolute melt up, and I have all the targets for the downside once we roll. Trust me, we're going to be nailing these things. So now that we're past the psychology part, the 500 was never going to be resistance ever. It was going to be a melt up. It's going to be a FOMO move. That's what it was, right? So let's get to the anchors. This is what part everybody's been waiting for. Anchors. Okay. Look at the back test on these. These are what I posted hours before and pre-shit, days and days ago. We still have the blue ones to come back to, so don't forget about those. Every YouTube video, we keep reminding you guys on the YouTube, or on the YouTubes to watch the blue back-tested anchors, right? We keep saying there's a potential to come back to these, and eventually we will, and we will be ready. But for now, the faster ones are coming from top down, and I'll give you this little breakdown for free here since I've talked about these before. This top-down anchor view app needs back tests. Notice the price action here, okay? And this is what I'm talking about in magnets, like the first part of my video here. These speak to each other. These algorithms, they hold weight with each other, right? They have packs. They got deals. They talk. So price action, as you notice, has stayed under these anchor view apps the entire day, right? And per the last couple of YouTubes and me bitching since 2017, talking about how they manipulate the markets overnight. It's hard to do when the markets are open. It's easy to do with futures when the markets are closed, right? So if you see the ES move up 10 points overnight, that is 1 point on the SPY, right? So it's very easy to manipulate the futures overnight. That's no big deal. We're used to that, right? So these anchors got manipulated over, right, through after hours right here and pre-market. This is the same play that we had seen play out four times actually this week. So what's the conviction? Well, it pops out of the gate here, pushes into an all-time high over 500 a little bit. That's going to be the first trap for the longs, right? In psychology speaking, that's perfect, right? The longs are like, oh my God, we're going to full all-time highs. No, we're not. You're not waiting for confirmation. And without confirmation, you're adding risk. We don't add risk here, okay? We're all about not risk. So the fresh low breakout is an algorithm scam that we've seen here, and this is a beautiful way to put it on the 5-minute chart. We got those anchors back tested all right here that we called hours before. We finally got it back down. We got the long, and then we got more FOMO up into all-time highs, which is 100% expected, right? I had the bounce points to the T, intraday and long-standing time frame. So how would I play this? Well, I'm going to put myself at a high-low fib range, and I'm going to watch the pre-market ups as well. I'm going to notice that gap, and I'm going to notice the magnets that need to be back tested. So I'm going to run different anchors and fibs throughout the day to try to manage even more risk off potential. So what I did here is I fibbed out this high-low box because we had no algorithms after hours, no algorithms pre, no computers helping us out with any kind of picks in the morning. No big deal. That's fine. Once we have a high-low established range of the volatility of a Fibonacci retracement, right? We have good markers to work with. So once we have came down, now you'll hear me say this a lot, since this is the start point here and this is the end point of the fib. You can see the dashed line goes right here. That's a start point. So we are using this top and this bottom. So technically when this top is made, when this top gets created and starts heading down, that's when I draw the fib. Okay. So we draw that fib as it starts, which means since this is the start point, this on the left is data we know, and this on the data right is data we do not know. Okay. I know it seems very simplistic. You know, what are you getting at? What are you getting at, Brandon? Well, let me tell you. It is the opportunity to fill price action above and below the golden pocket. If this is our box we talk about a lot, look at the price action up here. We have nothing in between the golden pocket top and to the top. So nothing between 499.90 to 557. There's no data. But what happened on the first point? Well, we drew this and it filled all the way back down. We called the short all the way to low a day, obviously because of the anchor view apps, but also because of the bottom of the fib. Once that was filled up, what do we look for? Well, we have no price action up here. So if we recover what? If we stay above the anchor view apps and start recovering our intraday anchor view apps, these two guys right here, we are going to see the upside potential through the golden pocket and fill to the top part of the Fibonacci range where there is no data. Look at this, between the golden pocket and the top of the Fibonacci range. I know I'm a broken record sometimes, bear with me, but that data needs to be filled, okay? This is what it looks like when it fills on the bottom side. There's candles where there's no candles, right? There needs to be candles here. There were candles here. Now there's not. Went back up to the golden pocket. Now this is where we don't have candles, right? No price action. And poof, we will magnet to the top of that fib range. Treat it like a gap. Treat it like a filled gap. Treat these Fibonacci price actions like filled gaps, okay? If there is no price action to the top low from the box, the top of the golden pocket or bottom of the golden pocket, you have potential magnets for that, okay? So check this guy out too. We have a back test, and this is where I called long, of course, the anchor view apps. And I only wanted to come to the golden pocket top and the top down. So I'll talk about our trades right now. A couple of the trades. We did 5 trades today, 100% accuracy, green for green. We took a couple of the good ones in pre-market here, and then we did the short from the top. I did a walk down trade. Let's show you that on the 1 minute chart on Qs, because this has to do with confirmational back testing on intraday indicators such as moving averages. So this short right here from the top was a little bit of a speedy one. We were spending too much time into resistance. Note, price action here is into the +2 deviation away from our VWAP, which is the dashed purple guy right here. And of course, the dashed blue is the -2 deviation away from VWAP. I keep those extensions on because I like to know where the +2, -2 are. Similar to standard deviation, but I just use the deviation 2 away from regular VWAP. I love VWAP, obviously. So we had a short come up here because we spent too much time above volume area high, and we had been pushing into the +2 VWAP range. But why did we short it? Well, we have some key algorithms speaking to us saying, hey, guys, we didn't backtest confirmation, which you'll be hearing me say all the time here. We didn't backtest confirmation. What did we do? We sliced through the 200 SMA, which is our peach guy right here, dash line, 1 minute chart, comes down, hits our low, anchor VWAPs, remember? Hits that, comes back up, blows past again the 200 SMA. But did we ever come back down and test this sucker? Nope. Look at the price action here. Topped out on the VWAP, came back down, missed it. Pushed again, topped out on the top of that VWAP, came back down, missed it. This is called shying. The price action shies away from the moving average, right? It shies away. It does not hit. So at a later date, when the price action runs away and starts to come back down, we have a target, right? Because something needs to be back tested a lot of the time before it can continue a certain direction. So if we have a breakout and a run like this, and then I seen this candle right here, pow, engulfing, right? And when engulfing, it's not to speak of saying engulfing the whole price action as in it's in line like a mother candle would be. I'm saying the size and range of this 1 minute candle spiked, right? Got some volume to it, got some speed to it, right? And then we had some opportunity to backtest the 200. So I seen this candle break, I shorted here, rode it all the way down to the 200 SMA, okay? So that was one of the trades there based off our 200 SMA 1 minute volume weighted average price and a couple points of interest on volume. Let's look at our oscillation indicators on the 1 minute chart as well. So we're going to go into the same trade we're just talking about. I just want to talk a couple different keys that you'll be looking at here, right? Head and shoulder, okay? Not the most viable bearish pattern, but we'll throw it on there for now. Not my favorite at all. That's 10 out of 1 through 10. That's the last out of 10. It's not my favorite. Number 2, we'd be going through here. We have a breakdown of RSI high. So we have a lower high, lower low, micro, breaks down into the bottom channel. Okay, great. Now that's downtrend. We have a RSI that is now stuck in the bottom side. Now, if you guys aren't doing this, look at my indicators to use. We got a lot of them on YouTube and that section on how to read RSI and MACD, or at least how I do it, if you want an example. But the bottom channel of the RSI equals low trend, okay? This can equal lower high, lower lows trending down because we are stuck in the bottom channel of the relative strength index, okay? Same with the MACD under the 0 line. Look what the MACD did, right? Boom, histogram beat out, which means the red wave histogram is taller than this wave, green in the buyer side. We had a cross right here at about 9:16 a.m. during that snap down, just as we had volume beats coming in. So we had a whole bunch of stuff saying, hey, it's time to swap, right? We had oscillation, we got volume, we had a speed candle, we had the +2, we even had a 3 up, okay? And I'm really big on things on 3 in the market. Now, that was the big counter. Now, if you were to, did we just identify a midday? Oh, we totally did. Boys and girls, this is a treat. You know me in gaps. Unfilled gap live on the 1 minute. This will come back and fill. We gotta chart this off. Sorry guys, I gotta take a little break here. Intra, unfilled, 1 minute, gap. All right, We got to have this back. I'm very keen on these gaps, my friend. We will see that price action again, maybe even today. That's insane. So we're going to see, keep in mind, 499.16 to the downside will be a target on confirmational rollover. You heard it here first. We'll come back and touch on that again, I bet, in the next couple days when that hits, maybe even on CPI. Now, to come back into a couple of the other dynamics of trade here, let's talk about SPY real quick. We talked about the anchors, and I do want to talk about how SPY had a little bit of divergence. The, SPY was carrying, right? So actually, if we just do this, we'll just do it side by side so you can see it real quick. But the Qs and the SPY, notice here, we had some divergence in the morning where Qs had popped up, did this high a little lazier than ES did. So this is another long scalp that we had taken here off the bottoms of those anchor tags where ES kind of front ran and pushed all the way back up here. After that first tag and ran down. Qs somewhat followed, but it was a lagger. If you go minute to minute right here, it is just something to watch. If SPY front runs and starts running away, it can generally have an attempt to drag the Qs. We've been getting a lot of divergence, but something to keep in mind. So SPY, we also had a couple of green trades here. Now, again, we called this trade down to the short target of 556.70. I said anchors. I also posted this one on X. We got within a point, so that's a solid one. We called it at this lower high right here and down, so that was about 6 points on ES. Not bad at all. And then we definitely have an opportunity to switch back. So a lot of the questions I get, like, how would you trade this, right? A lot of times, oh, I missed the big run up. I don't want to FOMO all-time highs. What are some secondary later afternoon options that we come into? Well, let's go to the 5-minute chart here, and we're going to talk about that anchor low that we had. We got this beautiful bounce, and this was our bottom, right? And moving averages, again, confirmation, something that needs backtest, or something I like for catch up. You'll hear me say that a lot on X. You'll hear me say it a lot here. And the moving averages have to catch back up, especially after some running. So again, we have an opening morning shy right here where the 100 EMA was never backtested. And there's a push down right here where the 100 EMA came back and then made the follow through move, right? That first initial move up, you didn't really miss much until if you would have waited for confirmation right here to push you back up. Something to always wait for, man, especially with those VWAP ranges. We use these VWAP ranges a lot when we're consolidating here for quite a while. When we got hot RSI, we can see that come down to the purple VWAP, now back to the -2 VWAP. Look how perfect the -2 VWAP hits, right back to center, right back to +2, and FOMO Momo with the Pow Man speaking, right? So just a couple little key indicators there. We're at all-time highs, FOMO moving as expected, and we won't really see anything else besides CPI that's going to be a precursor for hopefully a different directional move. And I don't think it's going to happen until after we get that CPI data, because Powell, obviously, we had the slow jam cruising up here. Last but not least, I will touch on the 666, yeah. So I'm really big on confirmation. The 666 simple moving average is one that I've been using a lot of, especially in the terms of confirmational backtest. We haven't seen the 666 in quite some time. We did have a backtest of it right here. We didn't shy it by any means on SPY, but something I did post on X. Whoop. As well here is the 5-minute 66 does need a back test, since we did way back here on the 2nd of July here. We did not get any kind of back test of that yet. So when we do start to roll over and we get the confirmational short top, that 666 5-minute will be a dead target. It'll be a beautiful one once we get going on. So for the rest of the day here, I would predict most likely that we are getting done with our opening range break. I don't think we're going to go too much high, not opening range, but range of the day break. I don't think we're going to go too much higher than this. And if we did, I mean, I got 57.0182 for an absolute top on ES. If it happens to make it another big, massive push into CPI, I don't see the market going over 57.0182 anytime soon. I think if we do push up there, we'll jerk around and we will get a little bit of a pullback there. Not the 8 to 15% one until I say so, until we get that lower high confirmation. But that is my last level I have in existence as far as a big part of our resistance goes. Man, I don't know. We'll see. We'll be ready. If you want to trade with us and you find some value in these videos, check the description. We are there. I do trade with Apex. We do trade with TopStep, the funded account programs, and the real accounts. We show all of our stuff day in, day out. We talk about it. We boast. We have fun in our chat above all. And just, again, a small example here for the Discord. As we go through every little trade plan, me and my partner, we go minute for minute talking about this stuff. We update every single P&L, every single entry exit. We had some really good pre-market calls we posted on X as well. So come hang out with us. We narrate every little tiny thing. We're trying to teach how to trade here. We don't spoon feed. So if you guys actually want to learn how to trade, we are the group for you. Come stop by. You guys take care. Trade safe.